Forbes India presents AWS The Mavericks in association with Matrix Partners India.
Hello and welcome to the Mavericks Founder Chats, a series of conversations from Forbes India presented by AWS in association with Matrix Partners India. Why have we called this show the Mavericks? It's because our guests are thought leaders, the digital native entrepreneurs who are willing to break the rules and the status quo to drive change. And in the process, solve some of our most pressing problems with tech-driven innovation and leadership. Today's Maverick founder is a man who has become synonymous with the word pay over the past decade. Let me explain. In 2011, he found himself at PayPal as head of product for Asia Pac after PayPal acquired TrueV Security, a mobile payment security app at which he was the CEO. He then went on to found Paysense, a digital lending startup. Paysense was then acquired by PayU. The plan was to reportedly merge it with the credit business Lazy Pay. The man I'm talking about, who's quite literally paying it forward, is Prashanth Ranganathan, now CEO of PayU Finance, who has spent over 17 years in the consumer mobile and security solutions space and garnered huge experience in digital payments and lending. Welcome, Prashanth, to the Mavericks Founder Chats, and I hope I got most of that right.
Absolutely, and thank you, Brian. It's great to be here. Looking forward to this conversation.
Super. Joining us in this conversation is Sachin Chawla, Head of Digital Native Businesses for India and Southeast Asia at AWS. Sachin will enlighten us on the role of technology in the growth of DNBs, fintech startups, as well as the future of fintech. Let me begin with Prashanth and his journey from PayPal to PayU and how it has helped him garner expertise across product, tech, and big data in digital lending. Prashanth, how would you describe this journey up to this point of leading PayU India's credit business?
Yeah, Brian. So I think the journey has been one of true entrepreneurship, and when I say entrepreneurship, it's one that has its fair share of ebbs and flows. There's been moments of great rejoice, and there have been some very dark, tough moments as well. I'll start back from when I first came into PayPal. So I came into PayPal not because I was looking to kind of exit a company that I just built for 11 months or so at that point, but because we had built something so unique that PayPal determined that it was a better fit within their ecosystem than for them to fund us and have us build something to compete. So that's what brought me into PayPal, and that was almost 11 years ago now. And that was TrueV Security. And once I came into PayPal, I think I was the head of new ventures risk at the time, and it's a very loosely defined role. But the first thing I wanted to take on was all payment security as it related to mobile. Started off in mobile payment security, very quickly shifted to launching their consumer credit product, which at that time was a very, very small initiative, a stealth project of sorts. So that I led. And then quickly also launched their SMB lending. Now, both of those have become multi-billion-dollar businesses for them, and that became my golden ticket to punch. So 2 years into PayPal, I was given the opportunity to kind of go head up product for Asia Pacific, and jumped on the opportunity. Came into Singapore and looked at the region. What I realized even back in 2013 and 2013-14 is that in India, particularly, there was this massive boom in e-tail. So everything was going online. The mobile phone was becoming mainstream. And not only were they mobile phones, but they were smartphones. And for the first time, there was on the horizon the ability to access data at very, very low cost. So these smartphones were truly connected to the internet. And that drove a set of changes. So e-tail adoption became real. And so in 2015, just seeing the early markers of e-tail growth, I decided I wanted to be a part of the big change that was coming in India, especially in payments. So my view was, look, if e-commerce were to succeed, you first need to decouple payments from purchase. and then credit was the way to do that, and I had some history and some backing in credit. So that's what drove me to kind of build Paysense. And then fast forward 5 years, that became a phenomenal asset for PayU to acquire. And then now I see myself now running PayU Credit in the market.
Sure. And let's fast forward to the pandemic and all that happened in the past 1.5 odd years. Right?
Yeah.
How has that redefined the fintech space, particularly lending and payments? And how has it changed consumer behavior?
Yeah, so I think this is, I always say this, what started off with demon in terms of digital adoption was sealed during COVID, right? So if there's ever a silver lining to a pandemic, it's digital adoption is one of those. So what we saw is a massive shift in consumer behavior out of compulsion, to be honest. And I think most people who are very comfortable doing things offline in a very analog fashion suddenly had to figure out a digital alternate. And I think that was phenomenal for the digital boom in India. Now, alongside that came a set of challenges for companies like ours that had to very quickly reassemble to kind of meet that demand, to kind of face up to that challenge. So mind you, early 2000 is when Paysense and PayU came together. These were very early days, very different teams coming together. And right on the back of it, you have this pandemic and this work from home construct that we had to kind of get used to. That combined with the fact that BNPL and all things deferred payment were skyrocketing, posed some very interesting challenges for us. So yeah, it's been a phenomenal year of growth. It has kind of sealed our position as a market leader. And I think the pandemic has a lot to do with it, because people who would have otherwise never looked at digital payments or digital credit, definitely adopted it.
Sure. Okay, let's go over to Sachin here. And Sachin, maybe from your perspective, how has the pandemic changed the destiny of digitally native businesses and of consumer behavior? And is this change here to stay even post-pandemic?
Yeah, it's certainly, I think I'll echo Prashanth's comments there. We've seen the surge across industries and across businesses. Prashanth was talking about the e-tail boom and the smartphone users. And the smartphone users in India is about 760 million now. I think if my numbers are right, e-tail is somewhere around 38 billion. And, if you look at just the e-tail user base, stands at about 140 million users right now. And this has certainly, if you look at post-pandemic, the user base has has seen a sudden surge. We've seen a couple of things, the first is definitely the industries and customers that were on cloud, during the COVID time, they fared much better. And, whether it was to continue with the business, whether it was to invoke your DR and BCP and, some of those plans. And post that, as I said, across industries, we've seen the surge. Some were natural, during COVID. Some were obviously hit hard, like travel and the transportation business, which is also we see now coming back. And in general, if your question is whether it will stay, I think it is here to stay. It has caused a permanent shift, into the mentality. It has caused a permanent shift to move to digitization and, start doing things digitally. And it will only, get better as we come out of COVID, Brian.
Sure, got it. Okay, Prashanth, could you weigh in on some of the credit solutions that PayU offers, right from the buy now, pay later, and other market-specific products that you would have launched or plan to launch through LazyPay?
Yeah, so look, I think one of the reasons we did the deal with PayU is because PayU inherently had built a phenomenal product in LazyPay. While it was in its early days and is truly in its nascency, we saw something that that proved to be phenomenal over the last couple of years, right? So we saw that buy now, pay later would be a very big deal, especially in coming years. That was only accelerated through the pandemic. So the way I see the credit business coming together, so we have deferred payments through LazyPay, which is your 300 rupee transaction on Swiggy, Zomato, Book My Show, Dunzo, what have you. And that's primarily the customer acquisition flywheel. Today, it generates about 150 to 200,000 new customers for us every month. It's almost like it's getting delivered to our doorstep every month without any cost. Now, once those customers come through, we then systematically graduate them through various credit products, right? So the first thing we enable for them is checkout finance, which means if you then show up at an Amazon, a Flipkart, and a Udemy, and whoever, you can actually start using the LazyPay EMI options to pay over time. So you can take a 10,000 rupee phone purchase and pay it over 6 months. And that is an affordability play. While the first buy now, pay later avatar is more around convenience, the second one focuses more on affordability. And so it's a systematic graduation of the customer. Now, the same customers at some point in their journey require a cash loan of sorts. They need some money in their bank because not everything is digital, not everything works as a payment. So then they draw cash into their bank with just a couple of clicks. So that's a very natural progression for the customer. And now we are exploring other products, including a card product and others, where we're just saying, hey, look, you come into LazyPay, you have a credit line. We're going to give you all the different options to access that credit line, whether that be a deferred payment, a checkout finance, a card, a cash loan, and whatever else in the future. And systematically, I think because now we have these 3.5 million odd users in our ecosystem, we're also looking at giving them more options in terms of what would otherwise be called a digital bank. So we're systematically building towards that, giving them options to save, invest, insure, and various other things. That's the beauty of PayU, right? Because we also have a lot of other companies that we have invested in over time, and the idea is to bring the best in class into the foray for the LazyPay customer, and that's the journey we've been on over the last year.
Sure. Okay. And you did talk about briefly about the triggers for the merger between LazyPay and Paysense, right? So what specifically, brought you to the table, right? And the second part is, how would that integration actually be progressing since then?
Yeah. So 3 reasons why I think the merger made perfect sense. First is, like I mentioned, PayU had built LazyPay, the buy now, pay later engine, and we really wanted that flywheel, right? So that flywheel made a lot of sense for our cash loan business in Paysense. So we thought there was a lot of synergy in just combining those 2 assets, because one generates massive number of consumers and goodwill, and the other one generates profitability. And in any business, especially in fintech, I think one needs to keep both in mind. So that's the first. The second is, I think PayU itself is backed by Process. And what I admire about Process is their investment thesis and their commitment to India. So systematically, Process, if you've seen in recent news, has been very good about building out a full end-to-end ecosystem in India. And their commitment to India, plus their long-term view on their investments, was one of the most attractive things about why this deal made sense to me. In lending especially, one needs to have access to patient capital that's also very deep. So that was the second most important thing. And the third was the parentage and the platform and the ecosystem all combined together, right? So the parentage, like I mentioned, in Process, phenomenal investors. The platform, it was good to be on the PayU platform because you get to see a lot more data than you would otherwise see as a small startup in isolation. And third is you no longer play just the credit game, right? You systematically now start to play the consumer game or the consumer banking game. So your ambition increases because you're now part of a much bigger ecosystem that you have access to through partnerships and investments.
Sure. And how's the integration been since, is the process still underway?
No, it's been phenomenal. I think, while it was tricky to do an integration during a pandemic and work from home, we've stepped up to the challenge and gotten it done. The paperwork side of integration is the easy part, right? The integration of cultures, the integration of technology, the integration of product to create a common North Star to get the teams aligned on, and then to execute, all while you've not really met the team, has been the more challenging part. And that part, surprisingly, and I kind of, this is more a testament to the team and their nimbleness and agility, has worked out much better than I had previously imagined, or maybe I was just nervous for no reason. But like I said, the paperwork part of it was easy, but combining strategies, creating a common North Star, and then kind of bringing a common culture that we can all be a part of and then call our own has been the bigger part of the effort.
Sure. Sachin, what has been AWS's role here in helping PayU build this flexible, dynamic, cost-effective platform to launch new services and to support client growth?
Sure. Our relationship actually goes back from, somewhere around 2016 when PayU acquired CitrusPay. And, there was the need to consolidate the platform, and they were looking for a platform which can be scalable, which can give milliseconds of response time, which can also have meet the compliance and auditory requirements and so on and so forth. There's when PayU and AWS collaborated, and they started using the Mumbai region. We worked with them to create the architecture and really start to deploy on AWS. So it goes back from there, from 2016. I remember, I think the scale at that point in time was the number of merchants, we were about 10,000 scales to about 300,000. The number of consumers doubled from 25 million to 50 million. And Lazy Pay was actually, that point in time created in just about 2 weeks. So that's the initial piece. But now, like with what Prashanth is doing, we work with them in a number of areas, whether it is, for example, of detecting fraud rings using some of our purpose-built databases like Neptune, where you can actually build a graph. It's a graph database where you can build relationships for millions of customers, millions of people, and and look at those billions of relationships. You're also working with them with PayU on building a credit platform, which is based on EKS, which is a Kubernetes platform, managed Kubernetes platform. There's also work going on data and analytics, creating a data lake, which also ensures data governance and compliance and security. I spoke about the fraud piece, and if you layer the graph database and you layer the data science over it, building models, and there's where our machine learning solutions lab is, where we have our data scientists working with PayU's data scientists currently to create, develop ML models to improve lending decisions. So it's true partnership. There's a lot of work going on. I'll probably cue Prashanth to add anything on the engagement relationship.
Sure.
Yeah, look, I think I couldn't have asked for a better partner, and one that's been consistently with us. I think while we inherited the partnership through PayU, we were also a partner of AWS while we were running Paysense. Look, I think as a company, we need to know what we know and what our core competencies are, and what we leave to the experts, right? I think AWS is truly a partner in that sense. We've definitely benefited from some of the advancement in technology that AWS has brought onto their platform. An example that Sachin was quoting is Bang On, which is the graph database, right? So we had homegrown our own database to handle millions of nodes with hundreds of I should say hundreds of millions of nodes with billions of connections, and that was not scaling very well. And at this point is when we went out and reached out to the folks at AWS to say, hey, do you have a solution? And we were one of the first in India to have access to the Neptune database, even while they were making weekly changes to the underlying database engine. And I think that's been a phenomenal solution to help us in our credit underwriting decision. So especially, I think, Brian, you were asking me earlier about new to credit and self-employed, right? So my view is that anyone can really underwrite a well-salaried, credit-established, bureau-thick customer. But India is a country where most consumers and most businesses are actually new to credit. They're not part of the formal credit system yet. And while there's a lot of work happening on that front, this is where the need of alternate data comes into play. And this is something I had worked on when I was at PayPal to create insights out of connections, right? So if you look at like Brian as a discrete unit, you can only have so much data on him. But if you look at Brian as a function of his ecosystem and the people he's connected to, then the insights are far more powerful. But how do you do that across hundreds of billions of nodes, across or hundreds of millions of nodes and hundreds of billions of connections? That's where the power of like something like Neptune comes into play.
Sure. Okay, I'll just take a pause here and just prompt the audience to send in the questions for the panel. Right? I'm sure they would love to answer your questions, so please send them in, and we'll take them as soon as they come. Right, Prashanth, I just wanted to ask you, what is it like to be in this entire ecosystem that Process and PayU has created, right? I mean, you have Cypress Spray, you have Wibmo, you have Paysense, and more recently BillDesk. We won't talk too much about BillDesk at this time, but generally, how would you kind of describe what are we trying to achieve here, and what are the benefits each business can draw from the other, like payments and lending? Yeah. What are the synergies that you see?
Yeah, so look, I actually view it as a bit of a jigsaw puzzle, right? Like, I think when you see all the pieces together and how they add to the overall picture, I think it's a very beautiful picture. By themselves, each of those kind of pieces may or may not make full sense. But I think kudos to the strategy team here at PayU to have like actually painted that picture first, and then found all the best-in-class pieces to kind of fit in, to kind of fill out that picture. To me, I think, look, to do anything at massive scale, not just burn capital to get there, but actually to make these businesses work at scale, you need to actually build the entire ecosystem. And that is actually the mission of PayU in India. That's the mission of Process in India. So when you look at a Wibmo and what it brings from a bank's partnership standpoint, when you look at Pay Payments and what they do for the merchants, and when you look at PayU Finance and what we're doing for consumer, we are systematically solving for consumer, we're systematically solving for merchants, we're systematically solving for banks and other partners. And so that kind of brings out the entire ecosystem. So it's not just payments, it's not just credit, it's not just middleware for banks. When you put it all together, you're actually solving the entire ecosystem. And mind you, I think the thing we don't often talk about in those conversations is the type of data, the type of insights you're able to generate, because you're seeing all the different sides of the transaction. And therein lies, I think, some of the real key core capabilities that are being built out that will power the future. So we will be the best in terms of serving merchants with all their basic payment needs, but also their credit needs, their rewards needs, their customer acquisition needs over time. We will be the best in consumer lending and consumer financial services, because we see those consumers on our merchants. We see those consumers doing other things in the ecosystem, and we're able to be very insightful when we acquire them, retain them, serve them, right? And so I think it's just, I think it's great to be a part of an ecosystem. I often use this example, right? When you're a startup, you're like a turtle in a small tank, and a turtle only grows to the size of the tank, right? It will never exceed the size of the tank. I just feel like I'm that turtle that's just been dropped in a bigger pond, and now I think I can be bigger in terms of my vision and my views of what I want to build and what time frame I want to build it over. So yeah, it's just a much bigger pond and far more exciting to be a part of this ecosystem.
Sure. Okay, I'll come to the data science part of the business in a bit, but you did talk about merchants and working with small and medium business merchants, right? So could you kind of describe? I mean, this question could be for both you and Sachin. I mean, what does it take to get SMB merchants to actually digitize, and how much of a challenge is that? Hello.
Sorry, Brian, my apologies. I think I lost you for about 10 seconds of that question. Would you mind repeating?
Yeah, I'll just repeat that. Basically, since we were talking about merchants, so how do you go about getting small and medium business merchants to actually digitize, right? And how easy is that process?
Yeah.
And what is the willingness of such merchants to actually participate in such an exercise?
Yeah, once again, I think it's a need of the hour, right? I think a lot of these merchants were severely impacted during the pandemic if they did not have a online presence, if they did not have a mobile presence, if they're not able to take digital payments, if they did not have access to capital. I think the willingness aspect of small merchants, especially sole proprietors, has gone through the roof. If I look at the dashboards of merchants signing up for PayU and some of the other payment providers in the country, that's just gone through the roof. And I think that will stay, because I think now they have seen a much better version of what they were doing, and I think that's definitely going to stay. In terms of the tools, I think systematically these merchants are also looking for better ways to keep accounting, whether better ways to do payouts, whether better way to receive money, better way to kind of extend their business through credit. So we're seeing all of that. While I don't directly run that business, we're definitely seeing a lot of that. When it comes to credit, look, it's you have to have some basic data to underwrite the business. The best data is the transaction data that's flowing through us for any given merchant. So if I know the seasonality of your business, if I know the average run rate in terms of capital received and capital spent, then I think ability and then stability of the business itself, then I think the ability to underwrite you as a small business is just that much better. So simply put, I think it's when you see the merchant from a 360-degree view, you're able to underwrite them much better, and that's exactly what we're doing with our credit ambitions for merchants.
Sure.
Yeah. If I can add, I think.
Yeah, please.
Sorry. Yeah, I guess it's a very, as Prashanth said, it's the need of the hour. We have, about 75 million SMEs, which contribute almost 29% to India GDP. And, to digitize them, it's not that simple. There are a number of challenges. There is challenges around accessibility. The challenges around affordability. The challenges around simplicity of these solutions. And like at Amazon, we have taken this. We've taken this goal of digitizing 10 million Indian SMBs by 2025, along with Amazon.in. We went on this mission and created something known as the digital suite. A digital suite is a collection of ISVs, which makes it very simpler. They are partners of Amazon or AWS, and this makes it very simple for these SMBs to go and consume the solutions that they would want in daily life, whether it is CRM or HR or tax or accounting and things like those. So we have to make it really, really simple for them to consume this and not make it complex. I think that's one piece. And the second is also the workforce, digitizing the whole workforce. There is a skill gap, and I think as industry, as partners, we all have to join hands, and as we cross this chasm, become from the traditional world to digital world, we also have to make sure that we digitize the workforce. And we've taken a number of initiatives through programs, and where we going about and filling that skill gap. But I think there's more to be done there.
Sure. Okay, let's come to the data part of it. And Prashanth, maybe you could tell us, how are AI and ML actually helping you manage risk as well as improve the experience for the customer?
Yeah, look, I think that's bread and butter for us. I've already talked a little bit about the graph-based underwriting that we do, and to be honest, that is our secret sauce, right? Like, so basically, at the heart of it, we have some 700 million nodes. So that means 700 distinct individuals in India, or phone numbers in India that are connected a few billion ways, right? And that's the bedrock of everything we do. So every loan, every piece of credit information, every payment, every non-repayment, every collections attempt, every pretty much everything about a customer is hooked on top of this graph, right? So then you can see how rich the data becomes, especially if you take a network view of a given customer. So the role, again, coming back to your question, is of AI and ML is actually very significant, because I am not going after the customers who are already well served and well bureaued with a very thick file. That I think we can leave to the banks, who do that very well and much better than us. But for those folks who are not established credit, who are the young millennials who are just starting out their lives, who are looking for that break, that's where I think this data, this technology can play a huge role in enabling them, and getting them further ahead. So that's what we do. So that's on the credit front. Then on the fraud front, it's very similar, because isolated fraud is rare and it's often not noteworthy. But when you have systemic fraud, again, I think a graph-like infrastructure makes it very easy to catch it, and very easy to kind of clip it very early. And sometimes what looks like a very very normal transaction between two people, when you look across a network, can look very different. This is what I learned when I was at PayPal, when I built my first graph, and this is what I'm still practicing here at PayU at a much bigger scale. So I think the role of AI ML is significant. I know a lot of people talk about it, but we're actually using it and have been using it for the last 5 years to actually do what we do. And I think we've just gotten started. I still feel like we're in maybe the 5% mark of what's possible in terms of predicting, what a customer will want, when they would want it, and how do we serve them at that point. And I think that's the holy grail that we're looking to solve here.
Okay, great. Sachin, your take on this, on how data analytics is perhaps helping make decisions on the fly?
Yeah, I think, data analytics, machine learning, they all become one now. There's they're layers of each other, how do you put it? But talking just about, what Prashanth was saying on AI ML, I think he summed it up. There are a number of use cases which has becoming very common. Credit decision underwriting is one. Definitely, it's like, customers like what PayU is doing, and like, for example, what Credit Vidya is doing. They've developed models that are tested and that works pretty well now for this use case, which is credit decision and underwriting. And then fraud detection is another one. Customers like Coinbase, for example, which is a digital wallet and exchange platform from crypto. They use the So they use a service called SageMaker for user identification. So that's the fraud is becoming another use case. Client-facing experience use cases like personalization, customer interaction. For example, Policy Bazaar uses Poly for text to speech, so to really personalize that experience and make it automated. You can use, there's a number of things you can use on forecasting today. If you're in insurance, you can use AIML for claim processing. So there, honestly, it just depends what you want to do with it. There's the technology is available, and you, as Prashanth said, that it takes a little time for you to build it, but once you start, cross a line, and then starts to deliver in an exponential way. And I think we are at a stage where a lot of this is available for customers to come and play with.
Okay, great. So Prashanth, you did talk about tapping those new to credit, right? But
Yeah.
there are some obvious risks with that, right? It's a huge opportunity, but in terms of ensuring safety and maybe even privacy, right? I mean, how do you build that level of awareness? Is some kind of education part of the course for the fintech companies?
Yeah, I think, look, we subscribe to a view of let's call it fair lending, and I think it's absolutely critical that we educate our customers on what journey they're getting into, right? So I think it's important for the customer to create and maintain that equitable relationship with the financial services company, because ultimately it's that contract that governs their everything, that point forward. New to credit, the main difference between someone who's new to credit and someone who's not is that someone who's new to credit does not know exactly what the ramifications of them not following through on their obligations are, right? So often that's why you see folks that are potentially new to credit have much higher risk performance in various portfolios. So it's just because they're just not aware, they've not been educated, to your point, they've not been told that this is an obligation that needs to be met, and especially in this YOLO world that we live in, it just becomes a little bit more casual. But unfortunately, with credit, you don't want to start a relationship by destroying your credit, because that has fundamental long-term impact on your ability to borrow. And we're all going to need to borrow at some point in our life or the other, right? So whether it's for a bike, a car, a home, or what have you, we're going to have to borrow at some point. So I think, especially with new to credit, I think it's very important for us to educate, for all our fintech partners and banks, to educate as much as possible. And that's what we do. We try the low and grow approach, which is what BNPL is fantastic for, right? So you start off by saying, hey, it's 10,000 rupees, worth of, it's a phone for 10,000 rupees. You can split it in 10 payments. But that starts you on a credit journey. Well, it doesn't feel like a credit journey. You've generated an obligation, and then you kind of get the customer to get comfortable making that timely monthly payment. And then that puts them on the bureau. And then now, if they wanted to go get a credit card in the future, or if they wanted to buy a bike or a car, they're not new to credit anymore. So BNPL is a very natural way of teaching someone how to use credit without all the burden of that normally comes with thick credit. And then once they get used to that, then they know how to use it smartly and safely, and then kind of build up from there. It is very hard to underwrite someone who's new to credit, because credit by nature, the best signals for credit, are your demonstration of past credit behavior. And if you're new to credit, you don't have that behavioral trail. So a low and grow approach works, or alternate data using a graph-like approach works, right? So where I say, okay, Brian, you're new to credit. but you're connected to Prashanth and you're connected to Sachin, and you're connected to Sapna, and I know something about their credit behavior in the past. So without disclosing all that information to you, can I apply it to you? Because, you know, just like everything else in life, birds of a feather flock together. So I can apply that, and for most part, that actually is very that in the credit world, we say that is risk sloping, and that is very informative for us to be able to give new to credit customers a go. And that's the approach we've taken. And that's worked really beautifully for us.
Sure. Okay, I still have something more to ask you about data, but before that, before we move ahead, a gentle reminder to the audience: if there are any questions, please send them in. I think we just have about 20 minutes to go, so I'm sure the panel would love to answer your questions. Right, Prashanth. So still with data, there's this concept of ethical AI that people love to talk about, right? So how do you go about leveraging digital and data to actually create a more ethical AI? That takes into consideration privacy, risk evaluation, and avoids biases.
Yeah, so I think the last point you made is the most critical one, which is unintended biases creeping in, right? So in ethical AI, I think I'm no expert. I think I'll leave that to our chief data scientist. But we very consciously measure the performance of our model and what goes into the model to train it, right? So of course, if you train a model a particular way, it's only going to see what it's seen, and it's only going to spit out what it's, based on its training. So we're very careful in making sure the model sees good, bad, ugly, all of it, and then we continuously refresh that model as well to make sure it is continuously keeping up. We also very actively and consciously remove any biases that might creep into the training of that model. So we have AI enthusiasts and AI workers in the company who are very actively looking at, like, what is the data that goes in? How do we tag that data? How do we make sure the interpretation of that data is accurate by the models? Sorry, they're called AI interpreters. They basically translate the real world into the AI world, and that's a very important step, because if that step is not done correctly, and you unbeknownst to yourself introduce a bias, you can actually see that the model actually creating massive biases in terms of its output. In terms of I think the other point was around privacy.
Right.
Look, I think this is finally becoming a main stage topic in India. For the longest time, this is where I felt we were all lacking as Indian consumers. Our data would be on paper and it would just get photocopied and go 10 places. We wouldn't be aware. Finally, as things go digital, at least there's a clear audit trail of our data, who's accessing that data, why is it being used, was there consent for that particular use, and that's being tracked. The enforcement, of course, will come with as the law gets established, but I think it's good to see that we're finally there. But yeah, at the heart of it is about protecting your privacy. Now, privacy also has an opportunity cost, so you can be infinitely private, but then you will be systematically cut off from all the services that require knowing who you are, right? So I think there's a cost that one bears when they want to be extremely private. But I think the idea is to not be fully private. The idea is to participate with the right information exchange. If I'm giving you consent to use my data, then will you use my data for the purpose I gave you that data? Is the point. And I think that level of privacy governance, I think we all need to adopt. And that, frankly, that becomes a lot easier when it's all digital. When it's analog, there's this perceived sense of privacy because it feels like it's locked up in a cupboard. But that data is photocopied very easily without a trail. And so I'm actually quite excited that we're moving down a digital path. While it has its challenges, it actually protects privacy in a much better way, as long as all the stakeholders play ball.
Sure. Sachin, what are the security and regulatory concerns in the fintech space? And I'm sure AWS has some ways to address them.
Sure. I guess, I mean, security is obviously becoming a concern across the industries and more so in fintech because of the data that we deal with. There's the number of frauds are increasing. There's data theft. There are attacks. So all of that is also, as we digitize and world is becoming more digital, is only increasing. So that's on that's on security. On compliance side, I think there are concerns around what Prashanth was saying on data usage and data privacy and data residency, where does the data reside. There are also concerns around. There are different kind of compliances around. Where do you keep the data from different seismic zones perspective? Is it are you creating enough backups? So that you have it in the state or dire needs. So as far as security goes, right? For us, it is our top priority. For AWS, we have designed the whole AWS platform, which is kind of meets the global banks, military, and really highly sensitive organizations, requirements of those organizations. We also use the same hardware, software, and the supply chains, in each of our regions, regardless of where the region is built. That has been vetted for really top secret workloads. So, and if you look at the platform, it gives you about 200 plus services and features to keep you safe. It can run from access management to a number of tools which can find irregularities in your data using machine learning, DDoS mitigation, encryption to keep your data absolutely safe. And there are also this marketplace where you have a host of partner solutions that can come and help you run your apps, applications very safely and securely on AWS. We, as our teams, work very closely with customers to help them really architect it well. Because in cloud, what can happen is, there's so much of it is available. It's extremely important to have the right governance and the right architecture. So, we work very closely with our customers to make sure they're architected well and what's their security posture, where it is and where it should be. So we continuously work with them to, get them to there. And, what happens at the scale that we operate, it allows us to put significantly more investments in security apparatus and policing and measures that any other company will ever do. So it's kind of you living that tribe, right? It's like a tribal upgrade. So you have everything, and it's up to you what you want to use. But you have all this available because today Prashanth may come and give us a feedback. We want this, so we'll develop this. Tomorrow, some other customer will give the feedback. So we keep developing, right? So the amount of effort and investment that we do, it will be always disproportionately higher than any other company. And then you have the benefit of because you have the internationally recognized certifications and accreditations that are available because our data centers and our is certified from it, whether it is ISO 27017, which is cloud security, 27018, which is cloud privacy, or SOC 1, SOC 2, SOC 3, PCI, PRDSS, for example, for fintechs, or when you in the financial space. So all of that is also available. So I would say that you're more secure on cloud than there's no doubt. I think that the jury is already out. Than you would do otherwise. And as far as compliance goes, we've been in India for a number of years now. We've also announced another region that will go live in Hyderabad, with 3 AZs in mid of 2022, which will help our customers to have the multi-region architectures while keeping the data here, so you kind of work in a pretty resilient way. You can also address your latency needs, your data privacy needs. So all of that is taken care, and we always we have all the tools and services and features that needed for you to apply to the regulations that India has.
Okay, great. Okay, there's a question that's come in I think both of you could take this. How do BNPL platforms ensure secure consumer information? Who wants to take that?
Yeah,
Prashant?
so I don't think we we look at BNPL data any differently than any other piece of data. For us, I think as a regulated entity, there are some very clear, I think, guidelines in terms of like what we can and cannot do with data and how we should protect it. And I think, like Sachin said, we look to the experts in some ways, right? I think while the RBI is very clear on how to look at data, how to treat data, and what to do with the data, we then look to our own in-house information security experts, but also to experts from Amazon and folks who understand the cloud infrastructure in a very deep way. And I think the combination of in-house capabilities and competence, plus I think the best in class that we see from say AWS, gives us a lot of confidence that we are doing everything that we could be doing to protect the consumer's information. Sachin, anything to add there?
No, I would just say I think your first statement was that it doesn't matter. Every data is absolutely important, and you need to secure it. And as I said, the number of tools and features available, 200 plus. What you can use to guard data and also use machine learning and things like those to really predict, or protect data. So every data is need to be safe, and that's the endeavor.
Sure. Okay, there's one more question that's come in on how do you ensure good credit behavior while dealing with new to credit customers?
Yeah, I think Brian, this comes back to your question earlier. Like, how do what role do you play when you're a lender? And I think underwriting is just one aspect of it. I think education is a very big aspect of of the whole lending practice, especially when it comes to new to credit, where they don't have established behaviors when it comes to obligations, right? So I think it starts with one approach is low and grow, right? Get them on the 300, 500 rupee, very small ticket, Swiggy purchase, right? And then when customers get used to paying that off every 15 days, every 30 days, they've just established a behavior. I'm not saying that just because you can pay 300 rupees, you can pay 3,000 or 30,000, but that there's a behavior that's established that when it comes time to pay, you actually go back and meet your obligation. And I think that's 99% of the problem solved. Because whether it's 300 rupees or 3,000 rupees, you're able to meet your end of the bargain, right? Then the second thing that happens is you can systematically graduate that customer from 300 to 3,000 to 30,000. And at any given point, you're only taking a limited and very measured amount of exposure on that customer or that entire cohort, right? So systematically growing them is a very, very, very important part of establishing good credit and good credit habits with that customer. The third is, we all need a little reminder, right? Whether that reminder is a soft touch SMS, a WhatsApp message, a phone call, a slightly more assertive phone call, or in the worst case, a field collections. All those are very much part for the course when it comes to lending. I think people don't talk about collections, but collections can be very soft. It can just be a message. It can be very hard with someone actually door knocking, right? Hopefully no one needs a door knock, but sometimes it can turn to that. But again, it's to ultimately protect the customer's best interest, right? Because it's better to be reminded and collected on by a lender than for your credit bureau history to go completely kaput. So I think it's important to preserve your credit history and your credit score at all costs. So I think that comes with just good systematic education and communication, and then just helping those customers who need credit at the right time, but only the right amount of credit, right? There's no point goldfishing a customer and then having them leave you worse off than you found them. So I think that's something we definitely, absolutely never do. And that's,
Okay.
I think that's just very basic, but that's the only way to kind of get good behavior.
Okay, so I think we have time for one or two more questions. So something very broad for both Prashanth and Sachin. If we were to do some crystal ball gazing, how do you envisage the future of fintech? What are the possibilities ahead? Prashanth, maybe you could.
Yeah, look, a few things, and these are my personal opinions, perhaps not PayUs or anyone else's. I think this is a very exciting time for Indian consumers, especially uh, especially because their relationship with financial services is changing, right? Um, and a consumer who's 22 today is not the same as a consumer who's 22 20 years ago, right? They are not looking to be served by their banks. They are not looking for their neighborhood bank to serve them. They're not starting off their journey of banking with a salaried account, right? A lot of them are gig workers. A lot of them have very flexible cash flows. I think they are looking for new ways of being served, and I think that's a market reality. The other part of it is, I think we can't ignore what's happening in this world of decentralized finance or crypto, right? I think while I think the regulation and the law is still kind of shaping on that front, I think it's very much here to stay, and that's my personal view. And I think we either we embrace it or we get left behind. So I think if I were to look 5 years from now, you would have very deep conversations about what decentralized finance means. What is one's relationship with money? How is that money actually lent, saved, grown? All that will be very different. I think what has happened over the last 30 years will now happen in 5. And so that's what makes it so exciting, right? Because I could be a dinosaur in like 5 years if I don't keep up. I think it's already happening. It's just a question of time whether we realize it or not.
Sachin, very quickly, the future of our money and the way we deal
Yeah,
with it.
I'm not an expert on this, but uh, I am going to take a little bit of also of a technology lens to with it. I think that one or two things what Prashanth said is definitely. I think we will see. We still don't have challenger banks or digital banks in India, right? I mean, the regulatory framework doesn't allow it, but I think sooner or later that will happen. I think that's one. The second is we do feel that fullness of time, most of the fintechs, mostly they are, but there's few still legacy. I think they all will move to cloud for sure. I think data and analytics will become mature and become table stakes. As what we discussed this whole episode. It'll just be table stakes. You can't operate a fintech without that. I think every application will be fused with some amount of AI and ML as we look into the future. It'll get embedded in the application itself.
Yeah.
So I think that will definitely happen. And I think server computing will go out of fashion. It'll be all serverless. I don't think people will use servers anymore. It'll be all event driven, and you don't need. It's totally abstracted as we move forward.
Great. So this is it's been a fascinating conversation. Producers tell me we've run out of time, but I think we all agree it's been a crazy period, crazy growth period, I would say, for fintech. And the best part is we've just barely scratched the surface. So there's a long way to go there. Right. So thanks everybody. Thank you to the panelists, Prashanth and Sachin, for this lovely conversation. Just a request, viewers, if you could share your feedback through the forms available to you, that would be really helpful to us. Thank you. Thank you, everybody.
Thank you.
Forbes India presents AWS The Mavericks in association with Matrix Partners India.